All right, we're going to focus on health insurance here. You just watched a 4-minute video as an overview. I need you to go back and do that. If you somehow ended up on this one first, you need to go back and do the other one first so you get an idea of the general terms. And then the first thing to do here is to fill in numbers 1 through 5 to the best of your ability from memory. So pause now, do numbers 1 through 5 here to the best of your ability without looking anything up. All right, so for monthly premium is what you have to pay to get the policy. So we're going to define this as the amount paid each month for insurance coverage. So think of this like buying the policy. You have to pay upfront for just to be part of the insurance coverage. All right, copay is a fixed amount that you pay for a medical service. So you go to the doctor's office and they charge you $30, or you go to the emergency room, they charge you $100. That's your copay. That's what you have to pay at the beginning of your visit for your medical service. Deductible is the amount you pay for medical services before the insurance benefits begin. So the amount you pay for your insurance benefits, or actually let's make it medical services. Amount you pay for medical services before the insurance benefits begin. So they will not even pay anything toward your health insurance until you have paid your deductible. And that varies for people over different policies, but they might set it at $1,000, they might set it at $5,000. You have to pay that amount in healthcare expenses before they will start to cover you. All right, coinsurance is a percentage thing. It's a percentage of the medical bill that you pay after your deductible is met. Percentage of medical bill paid after deductible is met. Okay, so you paid this deductible over the course of the year. Now you're free of that. You go to the doctor. If you have to pay coinsurance, then maybe the insurance company covers 80% and you cover 20%. And so that's what coinsurance would be, where they're paying a percentage of it and you pay a percentage of it. Not all insurance policies work that way. So you have to know what it is you're buying to know what your costs are going to be, but that is something that some insurance companies do use. All right, out-of-pocket maximum is the highest amount that you could possibly pay for out-of-pocket. Well, that's fine. Out-of-pocket for medical expenses. So once you reach this amount, you don't pay anything. You don't pay co-pays, you don't pay co-insurance, the deductible already happened, your premium already happened, so you pay the premium to get the policy. You then have to meet the deductible. So if you haven't had medical services, then the next time you go, you're going to have to meet your deductible. You may have to pay a copay when you go, you may have to pay co-insurance when you go, and then once you reach your out-of-pocket maximum, you won't have to pay any money for your doctor visits. Okay, so let's look at an example. Shana just started a job with a new company. Company's human resources department has presented her with 2 options. All right, so the first option is a traditional health plan. Requires her to pay a copay for each medical service until she meets her out-of-pocket max. Okay, the second option is a high deductible health plan that requires her to pay the full amount of each medical service, until she reaches her deductible. Then she's going to pay coinsurance until she reaches her out-of-pocket max. All right, so a high deductible health plan would be one where you have to pay for a lot of services before the insurance company starts to kick in. All right, so let's look at these. HDHPs are becoming increasingly common options for employers to offer their employees, and that's because it's cheaper for them to do that. So if they buy a policy from an insurance company and give it to you, and you have to pay all this money on your deductible, the insurance company can sell it to them for cheaper. So that's why an employer might choose to go that route. So the gold plan, the monthly premium is $129. The silver plan, the monthly premium is $40. So it's a much lower premium to get the silver plan, but there is no deductible on this gold plan. So the first time you go, they're going to pay for it. In the silver plan, you have to pay for $3,000 worth of medical care before the insurance company starts paying. Also, you will pay your out-of-pocket maximum up to $4,000. So this coinsurance that you have to pay, this 20% that you have to pay, you're going to have to keep doing that until you reach $4,000 out of pocket. These copays over here on the gold plan, they will rack up too, but only until you get to $2,500. And then your out-of-pocket max is met, and then you're good. Okay, so we're going to need to reference this page. So you're going to need to keep coming back to page 26 to answer the questions as we go on. All right, I'm going to move over to page 27. Okay, to help inform her decision, Shana looks at her health expenses from last year to see which plan would have saved her money. So when you're making your decision, you need to think about your health, you need to think about your family's health, you need to think about any procedures that are upcoming. You may need to think as you're older whether your kids need something, like are they going to need orthodontic work, or are they going to need some sort of MRI for something. You have to sort of make as good a plan as you can. Now, health expenses do come up in an unpredictable way, so you can't make a perfect plan, but you can at least plan for the things that you know are coming. So she's trying to pick out the best plan to save her money. That's like it says here, it's impossible to predict the future. We know that. But when you go to guess your health expenses, you have to estimate the best you can. So fill out the table below to show how much Shana would owe for health expenses last year under each of these plans. Okay, for the gold plan, use the copays on the front. For the silver plan, once she reaches $3,000, she will only pay 20% of each expense, right? Okay, so I would like you to pause here and do the best you can filling out both of these tables. The top table is for the gold plan. The bottom table is for the silver plan. Every time you add an expense, make an update to the running total so that we have a final amount that shows how much is on the gold plan, a final amount that shows how much is on the silver plan. All right, so go through that, pause here, come back when you're ready. All right, so for the doctor visit, for each expense on the gold plan. So if you look back at page 26, you're going to see that the doctor visit costs a copay of $30. So she has to pay $30, which means her total for the year is now $30. She does not pay this $120. She pays $30, and the insurance company picks up the rest of it. All right, she got into a car accident. She pays $2,500, or that has $2,500 medical bill. She is going to pay on this medical bill a total of $500. Why would that be? Well, this was an ER visit, and according to her insurance plan, ER visits are expensive. They're going to cost $500 when you have to go to the ER. So if we add that to the previous $30, now our grand total is at $530. Okay, x-rays are $380, but for her x-rays are $50. So now we are at $580. Okay, physical therapy, 6 visits at $100 each. Her physical therapy costs her $25. And so that's a total of $150 for her PT. All right. So every time she goes to PT, she has to pay $25. The insurance company picks up the rest. All right. 150, 580 would be $730 now. Okay. For this, let's see where we're at now. Specialist. No, doctor's visit again. Same as before, right? $30 again. So she's going to pay $30 for that, which takes us to $760. Now she sees the specialist for $200, and it's going to cost her $50. And so she's at $810. The monthly premiums for the gold plan were fairly expensive. It was $129 a month. Well, comparatively, it was expensive. And that was a total of $1,548. If we add that to the previous total, her insurance cost for the year was $2,358 for all her medical bills, right? Okay. When she's on the silver plan, things change quite a bit. So that doctor's visit for $120, she pays $120. And the reason is that's the first expense for the year, so she has not met her deductible yet. Her deductible was $3,000, and her out-of-pocket is $4,000. So she's well under that at this point. So she's paid $120. Now she goes to the ER after the car accident. How much of this $2,500 does she have to pay? Well, it's unfortunately going to be all of it, because again, her deductible is $3,000 and she has not spent that much on medical care yet. So now she's at $2,620. She's pretty close to her deductible now. Next thing is the x-ray for $380. Well, that happens to be the exact amount that she needs to get to that magical $3,000 number. So she's going to pay the whole $380 for her x-ray, and now she's at $3,000. So because of this, the deductible has now been met. So every other expense is going to start to be covered. All right, physical therapy, 6 visits for $100 each. So if we do $100 times 6, we get $600. And she has to pay on her coinsurance 20% of that. So now the insurance is starting to cover it, but she's going to pay 20%. And so that 20% comes out to $120 here. If you add that to the $3,000, now we're at $3,120. So unlike the gold plan where the insurance company just picks up the tab other than the copay, now she has to pay 20% of her expenses. All right, doctor's visits $120, and again, it's 20% of that, so 120 times 0.20, that's going to give us $24. And I think that was actually cheaper than the copay on the other plan. But she had to spend a whole lot more money to get there. So, all right, specialist visit, 200 times 0.20. And that is, oh wait, I didn't update this. $24 is $3,144. And then this came out to $40. So now we're up to $3,184. So that's a lot of money. But the benefit for her was that her monthly premiums were a lot less. She wasn't paying the $129. She was paying $40 a month. That's a total of $480. If I add that $480 on, now I'm at $3,664. Okay, so the gold plan was $2,358, and the silver plan was $3,664. All right, based on the information, what do you think she should choose? Keep in mind that even though one plan might be cheaper this year, you'll still need to consider both plans because Shayna's health expenses could be more or less next year. Now, the thing about that is typically in most jobs that offer insurance, there's a period of time called open enrollment. I'm going to write that down here so you have it. Open enrollment. That is when you have to make your decision about which type of insurance to get. So this is the decision time. You can't change your mind after open enrollment for the whole year. You're stuck with that policy. The only way you can ever make a change outside of open enrollment is if you have some kind of life-changing event, like if you get married or if you have a kid. Then you can modify your policy, but you are going to be stuck with this for the whole year, so you really got to do the best you can to predict. You might want to choose the one with low monthly premiums, but if you do that, you're going to have a high deductible. So if you then have a car accident, which nobody can predict, you will have to keep paying for that in full until your deductible is met. If you have a higher premium plan, you pay much more per month up front. I mean, if you look at this, this is $1,548 compared to $480. It's a pretty big difference, but you're paying less for every event, and so you come out better in the end. In this particular instance, so you have to make your best guess of which one you would go for. If you did not have all these events, and all you had to pay was the $480 because you never went to the doctor, or you very rarely went to the doctor, then, you know, your high deductible plan could be a better option for you. So this is something you have to evaluate your own health and evaluate what you think is most likely to happen. You don't want to be without insurance altogether. You got to have something, but you can make a decision as to whether you want to pay more per month or pay less per month and take the chance that you stay healthy. All right, that'll do it for this section.